Okay, I want to share a gem with you today. This is Patrick Bet David, and I want you to listen in to he and his home team as they talk about what would happen if the Fed reduced the rates, cut rates more. We've talked about this a little bit in some of our videos, but this is really important. I want you to listen in, and I'll turn it up in a bit as they discuss the economy, what's going to happen if the Fed reduces their interest rates. And please pay attention. This might go a couple minutes. It's a couple minutes worth of your time if you want to pay attention to what's going on in the economy and what would happen in real estate. Patrick Bet David's right here, and I want you to hear what he has to say.
Let me kind of talk about this whole thing you're talking about with market crash. Okay, with whether it's going to eventually backfire, something happen.
Got you.
You know what's worse than a market crash?
What?
A market crashing up. You know what happens when a market crashes up, like Venezuela did?
No.
Here's what it means. Okay. Do you know? Oh, my God. You know where I'm going with this. So these guys printed trillions of dollars into the economy. That money's in the economy.
Printed, Pat? You said printed?
No, that money's in the economy. They fed the economy trillions of dollars.
Okay.
So that money goes where? Whoever has the most value to be shown, that's where the money flows.
Okay.
The money doesn't stay with a person that doesn't know how to manage the money. If you don't have value, the money goes away to somebody else, okay? A reverse market crash would happen. Do you know what would happen if right now Jerome Powell decreased rates to 6%, 5%, 4%, 3%? Do you know what would happen today? You think that house that's $900,000, that the value hasn't moved even when they raised the rates to 8%, that $900,000 house is going to be $1.4 million. If it goes to $1.4 million and Dow Jones all of a sudden goes to 48,000, you know what just happened? This whole concept of rich getting richer, poor getting poor, it became rich getting richer, poor getting poor on steroids. The separation between the two gets wider and wider. The gap, take the poor, middle America's always been like this. Then you have the rich top 1%, whatever the percentage is. You're going to see the gap go like vroom, vroom, vroom. Did you understand what I mean? Like this is going to get bigger. The top rich is going to get bigger. The middle is going to come lower, but the poor is going to get bigger. How the hell are you going to, if you can't afford a $900,000 house right now, how are you going to afford it in a year if they lower the interest rates to go to 3, 4, 5%? Some of these realtors that are being irresponsible just telling everybody, well, wait till the rates come down. If the rates come down, it's reverse market crash. You want that to happen to Venezuela? Like what happened to Venezuela to happen? Oh, it'll never happen. You're just fear porn, all this stuff. Really? People can't afford to buy a house right now. There's a reason why they're renting. You're not going to have a customer qualifying for the $1.3 million home. Yes, you have equity in your house, but even if you got equity in your house, you got to find a buyer. Buyer can't afford it. There's a reason why we have so many strikes going on in America right now. People are saying, I can't afford my life. I can't afford a $900,000 loan. How the hell am I supposed to buy a $900,000, $600,000 house? So
Reverse market crash. That's what he's talking about. Reverse market crash. So what we're saying is you didn't want to buy at 8% or 7% because it was too high. Homes weren't affordable. What we're saying is going to happen with this reverse market crash is rates are going to come down and the price of the home is going to go up. If rates come down, the prices of the homes, which are already strong and have been going up for 30 years, are going to continue to go up. They're going to be even higher. So what I'm saying is that $200,000 home might be $250,000 now, okay? So the art of real estate, if you're wanting to get into the market, is get into the market. It might not be your dream home at first. Get into the market and build equity. That's what we're saying.